something that they're starting to signal a little bit as we roll into this next one, that this is something that realtors have noticed over the last little bit. I promise you, over the last year, we've truly noticed this. And maybe some of us are a little late to the party in terms of how we keep hoping for these rate cuts to turn things around. But ultimately, the key is it's not fixing the economy right now. These cuts, it's not fixing the housing market. That's for sure. We've said this over and over on our show now. We sold more houses last year at higher interest rates and higher prices. Prices have come down, interest rates have come down, and the buyers are disappearing. We're having more of an economical issue right now. And so, Matt, walk us through a little bit about what the Bank of Canada is saying here with their most recent meeting and some leaks that came from a behind closed doors meeting as well.
Yeah. And, at the end of the day, I was having a conversation with a reporter yesterday, and she said, "Oh, I noticed that there was an uptick this month in sales. Was it because they cut the interest rates at 25 basis points?" And I let her know that ultimately those rate cuts, increases, any of that, it takes time to work its way through the system. We saw back in the 90s when they slashed interest rates after bringing them up so high in the 80s, that people still didn't go out and buy homes because the confidence wasn't there in the market. And I think that's what the Bank of Canada is kind of saying here, basically saying they doubt the cuts will have a meaningful stimulate on the growth.
Mm-hmm.
And it acknowledge it, downplaying inflation risks, and the monetary policy may be reaching its limit as a recovery tool. And one of the reasons for that is they look at core inflation. And core inflation has been extremely sticky and elevated right now. So what they're kind of internally talking about potentially is, maybe we need to change the metrics that we're using when we're talking about inflation. Because if we're just going to stick with the core inflation and the basket of things that fall under core inflation, we might not have the ability to get interest rates down to where they need to truly be to stimulate the economy, because the economy has been reliant on basically this extremely low interest rate ever since 2009. And now all of a sudden we're back to interest rates that are extremely high compared to where we've been in the last 15 years. The short term people are getting interest rate cuts on their mortgages if they're in a variable. Anyone refinancing now, it's hard to say that cuts right now are having a massive impact, just
Mm-hmm.
because variable and fixed are so close. Like fixed has already kind of come down to a certain point, and variable is just coming back to it now. Maybe it'll dip a little bit below it. So there might be some payment relief on that end. Every 25 basis points for the government when they need to roll over new debt is a bit of a help as well. So I think just the mountain of debt that the Canadian government has, the central bank needs to get those rates down lower.
Yeah. I think an important issue here to bring up as well is that what they're talking about is it's exposing that deeper issue, right? The monetary tools can no longer fix these structural problems, such as productivity, government overspending, and the stalled energy projects. So I think it's we got to move away from the interest rates as the thing that are going to solve the problem for us and start looking at these real, kind of regulatory reform issues that we need to be looking at. And then when it comes, like you said, when it comes to real estate, I think it's that easing in payment pressure is the best that we can hope for. It's not necessarily stimulating buyers back into the market to get the sales moving again, that not only do homeowners and sellers rely on, but governments and all of our ancillary business as well, that essentially make more money and are more productive with a stable and strong housing market.
Yeah, what a fabulous point you brought up there, because that's 100% it. The investment this country needed over the last 15 years hasn't been there, and we're starting to see it now. And just because you're lowering interest rates, because some of those other areas weren't invested in properly, Now you've got that lag. It's finally worked its way through the system to the point where it's affecting us greatly now. And
Mhm.
had we been making those consistent investments, listen, we are a natural resource country. Let's not pretend we are anything else but that. I'm watching some of the oil countries out in the Middle East who are making money off the oil that they're selling to the world, and they're buying companies. They're buying American assets with it. They're reinvesting that money into data centers, AI companies, cryptocurrencies. They're expanding out. And here's Canada. We're shutting the oil down, and we hadn't been investing that money properly in the beginning. Okay, you want to stop using oil, uh, it's going to be hard to do for at least the next little while. So why aren't you selling it into the market and taking some of those profits and reinvesting it for the strength of Canada and putting stuff on Canada's balance sheet that are going to grow this country, grow the productivity, grow the income, so that maybe, yeah, we don't need to be as reliant on oil in the future, but at least we invested in something tangible now to, at least when we decide to cut off the oil, or scale back from it, that we've made those investments, that the country's going to be okay. And it was horribly done over the last 15 years. And it's gotten to the point where we're basically going to open the floodgates to oil again and try and sell it all over the world. So we've just wasted the last 10, 15 years.
A lot to unpack there, Matt, but I I appreciate the rant on it because at the end of the day, it's hard to sit back and stomach some of the decisions and ultimately looking at where we are now. And this isn't that it's all doom and gloom, but when we looked at a lot of our charts and how Canada was performing it in comparison to the rest of the G7, we're vastly underperforming. So there are decisions that need to start being made differently so that Canada can find its way back up to the top. The last thing that I want to say before we move on here is some of the outlook in terms of long term, and Matt, you mentioned this just previously, is how the economy and how everything has been almost propped up and relies on those low interest rates to keep us in a good and stable spot. The Bank of Canada may be forced to sustain those low rates at a longer time. We're talking about almost indefinitely, which will inflate those asset prices again, making affordability harder. That's not where we are currently, but that may be where we go back to if we can't turn this thing around with our actual regulatory reform, right?
Well,
And
we're,
not
we're
and
also
policy decisions in terms of the government, right?
Yeah, but we're also seeing stock markets at the highest prices they've at record prices. Gold, record prices. Bitcoin, record prices.
Mm-hmm.
So is Canadian real estate at record prices now? No. Um, when you take out Vancouver and Toronto, the housing market of Canada is actually doing extremely well.
Mm-hmm.
It's those two markets that got overextended or starting to pull back. In the meantime, everything else is starting to accelerate in price because the debasement of the currency is still happening at a very fast pace, and it will get to a point where real estate reverts and starts to catch some of that money. How long that'll take is dependent on when buyers get back into the market and feel confident. And one thing to help buyers feel confident is their stock portfolio, their gold portfolio, their crypto portfolio is accelerating to the upside. They're going to feel wealthier and get back into the market. So, other metrics are showing us that, hey, there's a lot of money printing going on and expected inflation coming down the pipeline. So they're catching bids. It's only a matter of time until real estate in Toronto and Vancouver again bottom out and start to catch that bid.